All right, welcome back to Stock Choice with Nick for this week's live stream, midweek movers live stream. In today's video, I'll be covering a market outlook. Take a look at the S&P 500, QQQs, IWO. Take a look at some new leaders forming in the market with Roblox, LCID, Airbnb, Unity, and MTTR. After that, we'll go through a list of 10 to 12 stocks that I have on my watch list going into the second half of the week, and then any stocks that you guys want to see. So if this is your first time tuning in, drop any chat or any chart requests that you have in the chat, and we'll get to as many charts as we can in the hour after I go through the watch list. So I want to have enough time to go through everything, so we're just going to run into it. I did want to say, let me jump back to this. This is sponsored by MarketSmith, so thank you. I announced that on Sunday on the breakout watch list, but we did get a sponsor for the channel. It is MarketSmith. We're going to be using MarketSmith to break down each of the stocks' fundamentals, group strength, fund ownership, stuff like that, and then go to a different chart, which is a little bit easier to see on the candlesticks. That's what I use. You don't have to use candlesticks, but to break down the charts a little bit more detail. So thank you again, MarketSmith. And if you guys are interested in using MarketSmith, there's a link in the description of this video below. All right, let's jump into the S&P 500. You see Airbnb on the list because we're going to be covering that in a little bit. So S&P 500, we had that follow through day on the 14th after a 6.2% pullback in September to mid-October. Since then, very, very strong move up, about 8.5%. But after this strong move, 8.5%, and in, 25 bars, call that 5 weeks. After 5 weeks of this rally, we've only seen 1, 2, 3 kind of days of a pullback. Market's getting a little bit extended. You're starting to see a little bit more volatility in the growth names, and when you're a low risk trader using stops at 3% to 5%, you're more likely to get shaken out while we're up here in the rally versus down at the base, just because a lot of stocks have made very massive moves already, and people that got in on this follow through day are starting to take profit. Stocks are pulling back a little bit. So if you're putting in new positions when the market's already a bit extended, higher probability of getting shaken out. So for me, I'm more swing trading, more getting in, looking for quicker profit than I was on this follow through day. Got good positions in the leaders down here. But one thing I'm really trying to do this week is trade less and really focus on maybe 3 to 5 trade ideas going into each day. And if I push the camera over to my whiteboard, I have no unplanned trades. So if I don't have it on my focus list going into the week, or going into the day, I'm not going to be trading it. So forcing myself to trade a little bit less. S&P 500 today up about 0.5%. We bounced at the 8-day exponential moving average, right around there. Probably the 10-day fits better. Short-term moving average, not important, the number. But now starting to push higher again. So good move today. Taking a look at the QQQs. Stronger move off the low. It was a deeper pullback. That was 7.9%, 8% or so. Since then, we've bounced 14% and then went through a little bit of a pullback last week, and I guess Monday was, depending on the stocks you owned, a quick pullback day. Today was very strong, up 0.7%. IWO, if you follow the channel, this is something that we cover all the time because this is the growth ETF. So you can see from February up until September, October, we were in this chop zone here. So unless you were putting on exposure quickly off the lows here and selling into strength, it's been a tough year as swing traders. But from that September low, we had a nice move, 14%. That was really the time to make money in the market. Now we pulled back a little bit. You can see this shows how tough Monday was compared to the QQQs, which is really just taking a look at the biggest 5 stocks that make up that group. So this showed a little bit of pain on Monday. I felt that pain on Monday as well, but a good turnaround Tuesday. That was IWO. And then last that we check here is ARKK. This is ARK, another good test of growth. Not getting out as much as IWO. Still kind of in this base here. I've had a little bit more success off the lows, but now we're pulling back. So when this pulls back, similar to the market, just something to keep an eye on. Did want to cover, now we're getting new leaders. So Roblox was the first, or one of the first ones to really get going. And what I'm learning more about is these really, really high volume power earning gaps here, where this sold off and then we moved up 42% on, I believe it was the highest volume since its IPO. Strong closing range. When the market pulled back, this did as well. Really strong pullback, actually. 13%. We had a consolidation day. And then ideally, this was a buy point through here. I did not take that trade. I completely fumbled that. But it's good to go back and study the stocks that are making these massive moves. So when we do get the opportunity to take these trades, then we actually take them instead of just studying. So a couple days pulling back. This was actually in Oliver's seminar this weekend, where he likes the power earning gaps, check back for a couple days, and then break out. That's one of his favorite setups. And you can see with Roblox, really nice move out here on good volume. So using that as a potential buy point, up 21% to the high of the day, and then closing 17% here. So very much a change in characteristic with the heavy volume, strong move up, and now continued follow through higher on massive volume. So with that volume, that's not just me and you buying, that's institutions taking their positions, and it takes them more than one day to take their position. So that's why you see, usually after a pullback or some tightening, a quiet area, larger volume days, and then continuation higher. So that was Roblox, wanted to point that out. LCID, this is another good one, just had earnings today, or might have been after hours yesterday. But we zoom out on the chart, we had in February, when everything was going parabolic, a supernova move, 600% up, completely fell apart here, just traded sideways up until October-ish. And then we finally started getting some higher volume days on the 25th, my birthday, some sideways action, follow through day, heavy volume. This is where institutions are starting to take a position. This is where the stock is changing characteristic. A quick pullback, had a nice area in here that was buyable, did not take that trade, again, kicking myself for that. Good volume out, another follow through day after gapping up. And then we consolidated, and this would have been a potential buy point if we weren't going into earnings. You don't typically want to buy a stock that's already kind of extended from its base, 83% going into earnings, but that just shows you how strong the demand of this stock is, because it was up 23% today, up 5% after hours as well on very good volume. So changing characteristic, tons of volume coming in, and now we don't have to look too much at the left side of the chart because something massive has changed in here. That's LCID. Another one I wanted to talk about is U. Similar massive volume coming out here. I am really upset about the way I traded this one because I actually got this, where was it? I forget which day I bought this, but I got it. It moved up, came down, and stopped me out right on the 20-day moving average. That's something I need to do better with, is once I do get stopped out, keep kind of a laser focus on the stock, because if it just immediately turns around right at support, you can put the trade back on, put the risk back on, and if it doesn't, then it just keeps on pulling back lower, and that's fine too. You don't have your risk there. I just saw I deleted the 50-day moving average, so let's put that back. But very good volume through here. Earnings, kind of weird where we gapped lower and then buyers stepped in the entire day, pushed higher. We did get an offering after hours yesterday where after that we gapped lower, down 5.4% at the open, and buyers stepped in, and you see got all those shares, 5.3, closed down 1% today after an offering. Extremely strong stock, a bit extended here. We'll see if we can find an entry point in a little bit on this. Another stock I wanted to cover was ON. This just had earnings, I believe this morning or last night. Let's see. Yeah, before market opened this morning. up 25% today on massive volume. Not the highest volume since its IPO, but definitely worth taking note. This is one that squatted a little bit, so if we can go to the 10-day, look at a 15-minute chart. Oh, it's down after hours, that's why it's pulling back. But gave you another area to enter if you didn't just get in on the open, where we pulled back here, tightened up. I am still a little bit cautious taking those moves, especially with the market where it's at right now. But if you traded that, very strong name. ON. What else did I have on this? MTTR. Also with that metaverse theme with Unity, you see good volume off the IPO, based out, and then giant cup, handle. This action was still super loose. I did try to trade this in here. Probably shouldn't have. I made a couple bucks, basically broke even through here. And then we got a nice move out on Monday, follow through on Tuesday, higher highs, higher lows, with absolutely massive volume. So keep these new leaders on your list. We're going to talk about Airbnb in a second here, but LCID, ONON, Roblox, RBLX, U, and MTTR. So let's go to MarketSmith now to go over the 10 stocks or so that I'm going to keep on my watch list going into the second half of the week. First, we have Airbnb. This did have a character change, gapping up on earnings, heavy volume. Since then, we did pull back. We'll cover that in the chart in a second here. But taking a look at the breakdown of the fundamentals, group strength, C-, leisure, travel, booking. It's a little bit different than that group, but I guess that's where you would put it. Accumulation distribution, B, composite rating 74. Overall, relative strength rating 90. Relative strength rating is definitely the number one thing that I look for on this chart. I'm always looking for the strongest stocks that are going to get stronger after a short-term pullback. Looking within that group, you can see this is the strongest stock in that weak group out of 14 on both a relative strength and a composite basis. Fund ownership, we only have 4 quarters to work with since it IPO'd last December. 664, 771, 991, and 1031. So we're seeing funds increasing their positions in this stock. And you can see that kind of looking at the volume chart. A lot of these highest volume days are on up days, especially recently. So good thing to see. Earnings just had their first positive year-over-year earnings, plus 240 there. Sales went from minus 22, plus 5, plus 300, and plus 67 year over year. And after-tax profit margins finally turning around. We went from minus 41, minus 132, then minus 5, and plus 37. So you can see in the latest quarter, plus 240 on earnings year over year, plus 67 on sales, and 37.3 after-tax profit margin. Looking at the chart here to find a potential entry point. Here you see the earnings gap up. This actually moved prior to earnings. Not something that I'll trade going into earnings, a move like this, just because earnings are basically a flip of the coin. You can either gap up or gap down, and you can't protect yourself against gap down risk. It's not like you could set a stop loss and that gets hit and you're out for a small loss. So unless I have a large profit going into earnings, 10% or so, I won't hold the position. And typically, even then, I won't hold a full position into earnings. I did that with Coin and got hit, but thankfully that has kind of bounced back here. Anyway, Airbnb, good volume on the way up, great closing range, continuation the next day on the 8th. Since then, we pulled back 1 day, 2 day, and then there's a potential pivot, but if you bought at the open, it pulled back only 2.2%, not too bad there. And then we finally did break through on Friday of last week on increased volume. So you see the pullback, lighter and lighter volume, sellers getting exhausted, anyone taking their profits after a 20% move, totally reasonable. Got exhausted. They basically got their shares that they wanted out of the market. And then we made that turnaround on higher volume and with a good closing range. Last 2 days, kind of sideways action, a little bit of a megaphone pattern here with higher highs and higher lows. But if we go into like a 10-day chart, yeah, not a perfect entry on this. Let's go back to the 3-month. I'll be looking for a break over today's high, 209.93, unless we open lower and then tighten up within the daily range, then a potential entry in there. I do like how we made that lower low and then we still closed relatively flat on the day for Airbnb. Okay, next we have Ampl. This is another IPO that has gone through a pullback now. It's got an A+ group strength rating, computer software and enterprises, which is the 16th out of 197 groups right now. Within that group, it is the 14th strongest on a relative strength basis and 41 on a composite. Has a relative strength rating of 93, composite rating of 67. That could be explained by the negative earnings that we've had, so no positive earnings on this just yet. Sales, plus 48, plus 66, plus 72, so we're starting to see acceleration of sales now. Since then, what else? Negative profit, after-tax profit margins right now, so still have to improve that. Let's take a look at fund ownership. Only have 1 quarter to work with, 32 funds taking positions right now. So go into the chart. All right, so this is one of those IPOs that just basically took off 2 weeks into it, 77% move up. Since then, we've had a pullback of 22%, and I really like the shakeout that we got yesterday, and even this morning, we got a nice shakeout. So if I go to the 10-day chart on here, you can see right here when we opened yesterday, we opened low and we pushed lower. That got bid up, started to tighten up, another breakdown. I think this was, at the beginning of today, we shook out the low. Well, I guess not the lows of yesterday, but the lows of the afternoon of yesterday, shook out those traders, and then dipped again here. So we're still trying to find some support, but we are starting to set higher highs and higher lows, or higher highs, higher lows. And if we can get over today's high, that could be a potential buy point for AMPL. Next, we have ANET. This I had on the breakout watch list going into the week. This was my spotlight stock of the night yesterday. And it still hasn't done anything wrong. Looking pretty good going into tomorrow. It's got an A+ group strength rating in computer networking, which is 12 out of 197 groups. Within that group, it's the 2nd strongest relative strength out of 15 and 2nd strongest composite rating. It's got a relative strength rating of 95, composite rating of 97, and accumulation distribution rating of A, meaning a lot of the large volume days come on up days versus down days, showing that institutions are accumulating the stock. Composite rating 97, covered that. Earnings per share up 9, 24, 29, and 22 year over year. Sales up 17, 28, 31, and 24. After-tax profit margin about 30% better year over year. Taking a look at fund ownership, that is also increasing, going from 1404 last September to 1551 this September. Nice steady increase there. And if you guys have any chart requests anytime during the live stream, you guys can drop them in the chat and we'll get to them once I wrap up these last 7 stocks. So looking at the chart here, we had I think there's 58% move up, including if I remember this, 30% move from the earnings. Remember, really strong earnings last quarter. Good continuation higher, and then we just drifted down a little bit. So one thing I wanted to point out, since the peak here, we've only pulled back 4.2%, including today's gap down where we closed here, gap down 2.6%, and buyers stepped in all throughout the day, closed basically flat on the day, and really setting this trade up for tomorrow, just to break over yesterday's high of 532.43 for ANET. Slightly thinner traded name, so just keep an eye on that. If you're trading with a large account, can't put as much position size on it. Next, we have APO. This is in finance investments management, which is 51 out of 197. That earns the group strength a B+ rating. Within that group, it's the 13th strongest out of 113 stocks, relative strength rate wise, and 40th out of 113 on a composite basis. 91 relative strength, B accumulation, and 83 composite rating. Did have negative earnings year over year last quarter, but that didn't really stop it from moving. Oh wait, no, sorry, that was after. Let's see, what day was that? Yeah, that gapped it down a little bit, but since then, holding up okay. What else on here? Taking a look at earnings per share, plus 165, 163, 47, and then now -9. So we're seeing a deceleration and now negative earnings. Yellow flag about that. Sales, plus 42, and then -8, plus 6. After-tax profit margin still increasing though, 33, 30, 47, or 48, excuse me, and 24. Fund ownership on this is continuing to increase from 579 last September to 837 this September. Going to the chart. All right, so nice strong move up, 39% since then. We pulled back 8.5% on the earnings day. Buyers stepped in later on in the day. And then since then, we did pull back and undercut that low. So anyone who got in on that pullback, if they didn't take profits there, chances are after a 6% move up, they might have gotten stopped out on the shakeout here. So we undercut the low, trade sideways for a little bit, bounce on Monday, and then an inside candle today in the upper half of yesterday's candle, which is nice to see, and above the 8-day exponential moving average. So with here, we have a downtrend line and a break over a flat top entry point. So we have confluence of indicators. The people who buy downtrend line breaks and the people who buy flat top breaks, both buying around the same price. So looking for a break over yesterday's high, 76.42 is a potential buy point for APO. Stop under the low here would be only 3.4%. So easy way to manage risk there. Next, we have BLNK. Let me see. So this is an energy alternative and other, which is the 10th strongest group right now. Solar, basically all energy stocks are holding up pretty well, but Blink Charging doing well, 10 out of 197, A+ group strength rating. Within that group, it is the third strongest out of 43 stocks and a composite rating of 13 out of 43. Relative strength rating of 96. We had that massive run in the beginning of the year, then started basing out. We'll get to the chart in a second. But now starting to pick up on increases of volume. Covered the group strength, accumulation distribution, A-, composite rating, lower 65 because we have negative earnings. But look at the sales, plus 250, plus 72, plus 178, and 603 year over year. Still is not profitable. Definitely needs to figure out its profit margins. Fund ownership on this is exploding higher. 28 last September, 184 this September. Going to the chart. So I wish I could bring up two of these at the same time, but here's BLNK. After a very large basing process and in one kind of a pullback larger than I'm typically comfortable trading, 61% pullback here. Usually 40%, 50% from the high. The less the pullback from the high, the more constructive the base is, obviously, just because there's more buyers, less sellers as it starts to figure itself out. So 61%, it was a high growth stock after a, 800% move. You can kind of understand why I pulled back so much while growth got hit in February. But since then, we started putting in higher highs, higher lows, and then massive volume coming in here. So really strong move up, but it was before earnings, so maybe that got everyone shaken out. Since then, higher highs, higher lows, higher highs, higher lows, and then an inside candle today on much less volume than the last 2 days. So if we look at this chart compared to LCID, massive volume up, lower volume pullback, sets a pivot, and then we break through that area on higher volume. So if this is any indicator of a changing characteristic, this is a stock that I want to be a part of. So let's see if we can jump into the 10-minute chart and find an entry. Possible downtrend line break here. Just anywhere where we can manage risk at 4%, 5%, ideally 3%. But let's see, there's a 2% stop below there, 4.4%. So if we use the 10-day chart, 15-minute candles, so each of these candles are 15 minutes, we pulled back to the 50-period moving average, bounced, started to consolidate. Now we have the downtrend line, flat top. With those lower time frames, when you go to analyze these charts, everything is less credible. There's more noise in the data when you drill down to these thinner time frames. So your likelihood of the trade working is less, but it allows you to find a place to manage some risk against. So a break over this area's high, which is 44.75, stop under the low here, again, 1.5%, and under this area, 4.5. So maybe you split your stop if you could get a good entry going into tomorrow. That's BLNK. Why is that doing that? There we go. All right, now we got Coinbase. This is one that I personally own, full disclosure there. But still holding up well. I'm not pointing these stocks out because I own them and think the 9 viewers, although I'm sure we're all doing well, I don't think we're moving the stocks by ourselves. Maybe I'm wrong, but let me know in the chat. Anyway, Coinbase, that's crypto related. I was really surprised at how it traded today, given that Bitcoin, Ethereum, all of crypto was really pulling back. I know Coinbase makes its money on volatility. The more people trade in the app, the more money it makes. But a lot of the time, it's been tied to the price of Bitcoin, where if Bitcoin pulls back, Ethereum pulls back, anything like that, Coinbase pulls back as well. So this gapped lower today. It was down like 3% at the open. And then buyers stepped in and we closed down 1%, which was, I thought, a good sign going into the rest of the week. So group strength rating, A, computer software, financial, crypto, 19 out of 197, still a strong group in itself. Within that group, it's the 5th strongest stock on a relative strength and number 1 on a composite basis. It's got a accumulation distribution of B+, composite rating of 99, and a relative strength rating of 83. Just had earnings. That gap down was, let's see, low was 320. My stop was like 318. So it was $2 away from my stop. Never hit that. So we continue to hold it, and it's done well since. Looking at the earnings, this is printing money. Earnings per share up 743 year over year, over 1,000, and then this quarter was disappointing because it was up 295% year over year. Sales up 495, 845, over 1,000, then only 316%. And then after-tax profit margin up 30, 42, 72, and now back to 31. Fund ownership, steady 396, 397, but that was in September. Maybe we get a change going into December because we did get some very heavy volume off the low in the base here. Let's go to the chart. And I see your question. We'll get to it right after this chart. So Coinbase, we're still on the 15-minute candle. So you can see some of the lines that I was drawing. I got in initially after this up day, heavy volume, well, second day of heavy volume. And then I just bought as we came through that area. We pulled back. I bought on this day more as we gapped up a little bit here. Same thing through this downtrend line, bought more. And I sold what I bought on the downtrend line, I think right around here, because we were going into earnings, didn't want to carry too much into earnings. This was the largest position that I've ever carried into earnings, actually, and unfortunately did not work out for me, down 8% on that move. But from there, traded sideways, actually putting in higher highs on Monday. And then today, like I said, we gapped down, and then we pressed higher throughout the day, only down 1%. And we're still above the 8-day, above the 20-day moving average, and looking good going into the second half of the week. Let's see if we can find an entry point on this. We did start to dip through the end of the day. I don't like just buying with a break like through that channel. I would rather coordinate it with also like a flat top breakout, or a break of a flat top pivot. So we'll give this some time. Maybe if we just come out over 347 or so, potential add or buy spot. the more time it trades sideways and really flags out, the better, because this was a 8% pullback. Maybe people that bought off the low, that's an 11% move, taking some profits, especially with the market getting a little bit extended, or was a little bit extended, needed to pull back. Maybe they were taking some quick profits through there. So the more time it spends trading sideways and tightening up, the better, because this daily range is still 4.6%, a little bit wide, even though it is buyers stepping in and pushing it higher, which obviously I like better. All right, looking at your question, for the first time investors or people are looking to learn about the stock market as they prepare to invest, do you think any time period during the year is best for that? So the last 2 months of the year, or last month basically, historically we've gotten what's called the Santa Claus rally, right? Where a lot of institutions are trying to dress up their holdings. So whatever stocks are already strong, they'll buy more of that. And we usually get a rally going into the last part of the year. Looking back here, we'll go S&P 500. So we had this chop zone in September, October, November we started getting up, and then we put in another pivot through here. And then I guess you can't really see it on the SPY as well, but nice strong uptrend all the way. Yeah, that's a terrible. Let me go IWO. That shows more of the growth stocks that we trade. All right, yeah, this really shows the story. So September we had a pullback, October another pullback, and then from there, really mid-November on, we had that massive run. Now, will we go on that type of run this year? I don't know. Historically, it's a good period to be trading, but if the stocks aren't working, if they're going against you, you're getting stopped out. You have to manage your risk. You can't just say, well, historically in December, the market's up 3%, 4%, so I should go all in. It does not work like that. But historically, it's a good time of the year. Let's see. DAC and AEHR. Yeah, we'll cover those in a second here. Let's go back. I got 5 more for you guys. Next, we have CPE. So this is in oil and gas, which is the 4th strongest group out of 197. Within that group, this is the strongest stock, tied for strongest on relative strength with that 99 relative strength rating. Also has a 99 composite rating, a B+ accumulation distribution. So it's the strongest stock, both relative strength and composite within the group. Let's take a look at earnings. We were minus 56 year over year, and then plus 24, plus over 1,000, plus 358. Sales up 51, 24, 180, and 91. After-tax profit margin 14, 19, 16, and 25. Fund ownership on this is starting to pick up again from last December up until basically last September. No, from December 19 to September 20, we went from 445 to 170. Actually, 146 was the low. Since then, we've turned the ship. People are buying, or institutions are taking positions in the stock and starting to push this higher. So you see on the chart, cup, and we're starting to put in the handle. Let's jump into the chart to get a better look at that. Dude, thank you so much for the super chat. I really appreciate that. That's the first one I've got that wasn't from my cousin. So thank you so much. I do appreciate that. If you guys are enjoying the stream, please leave a like and subscribe to the channel. I do this live stream every Tuesday night and put a breakout watch list every Sunday morning. Again, thank you so much. It's the first one I've gotten. All right, let's go CPE. All right, so you see big, giant cup here. I mean, even this 58% pullback, that's not usually what I want to trade. And I mean, I didn't trade any of this move up. From there, we had another pullback, 20%, had earnings. This was looking good going into earnings, but again, I don't trade going into earnings because it's either a yes or a no. It either gaps up or gaps down, and it doesn't always correlate with the earning numbers, as you saw with Coinbase. So I didn't have a position earlier, so I didn't hold anything into earnings. But after earnings, nice move up, 26% since then, and on big volume. So take a look at volume. Good volume on the way out. one kind of malfunction day here, but still closed above the 8-day exponential moving average. So was it really that tough of a day? I mean, let's measure it. It probably was. Yeah, 8% is a pretty tough day, but you see what I'm saying. Still maintained at that 8-day exponential moving average. And now we're tightening up, basically, probably not at all-time highs, but highs for the year here. Just looking for a break into that area. So yesterday's high, 65.39 is potential buy point, but also looking for high volume as we're making that move. If this trades sideways or does another shakeout, puts in more of like a flag like this, that would be better here, just because the more you shake out the traders, you frustrate everyone and get everyone to look away from the stock. Once it does make that move, everyone puts their eyes back on and they're like, oh, we need to buy this, we need to get it out, like it's moving up, we need to take positions, and it pushes higher. So the more shakeouts we can get, the more it trades sideways, the better. But it's right at that buy point already, so something to take a look at. SPE. CPE, not SPE. Similar story, MTDR. Also in oil and gas, A+ group strength, B- accumulation distribution, but also 99 relative strength, 99 composite basis. The number's not as strong. I guess in the most recent quarter, it's stronger than CPE, but basically the same story. If we jump to the chart, that's so this did not put in that second handle that CPE did. It did have a pullback, 36% instead of 63%. So good sign of relative strength against CPE. Nice move up here, 93% up. Pulled back 14%. And now we're starting to tighten up. Inside day today, couple of higher volume pullbacks on that move, but now we're making those higher lows. Nice to see. And we do have basically 5 days highs right around the same price. It was down 1.5% today, so it's going to have to move up 2-3% to get to that buy point. But a break over today's high or yesterday's high is potential buy points for MTDR. I keep on doing that. I forget to change it. Sorry about that. Got two more for you, NEWR, and then we'll get to the chats. So if you guys have any stocks that you want to see, break down on the fundamentals using MarketSmith, and then potential entry points, drop those in the chat. All right, NEWR, A+ group strength rating, computer software and databases. Within the group, it's the strongest on a relative strength, strongest on accumulation distribution, and 9th out of 26 on a composite basis. Fund ownership on this, let's see, pretty steady. Yeah, year over year, same amount of funds. I wonder if that's going to change with this earnings pop. Potentially, can't tell for certain though. A accumulation distribution, composite rating of 80, relative strength 97. Don't have positive earnings just yet. Sales +9, +8, +11, +18. So we're starting to accelerate sales a little bit, but after-tax profit margin still negative. Let's jump to the chart. Hey, McKinley, if you can DM me on Twitter, I want to message you and really show my appreciation for that. So make sure you follow me, Stock Trick Nick, there, and let's chat. All right, NEWR. Massive gap up on huge volume. And this is another one that was running into earnings, plus 16% from kind of the base area on okay volume, and then blast off. Massive, let's see, let's measure this. So from this move, closed up 38%. 38% and 67% move from the base, and no one is selling this. Like this pulled back 9%, nowhere near the 8-day exponential moving average. Inside day. So we had 1, 2, 3 inside days. Then we took out the low and then put in another inside day today. No one is disagreeing that this type of move should have happened, which is a great thing, because as we give it some more time, the 8-day comes up. Institutions that got initial buys on this day, they're looking to add to their positions typically, because if they were looking to sell their positions, you'd see this rocket down, and we're not seeing that. We're seeing a triple inside day, one undercut of the previous day's low, and then another inside day. So with this, looking for a break over today's high, 122.50 as a potential buy point for NEWR. And last, we have PAG, Penske Automotive Group. That is in retail automobiles, 85 out of 197, B- group strength rating. Within the group, it's the strongest stock out of 27 and third strongest on a composite basis. 93 relative strength rating, 94 composite. Whenever you have those two groups showing 90s, always something that I look at. I mention that in every video because it's that important. Accumulation distribution, B+, good to see there. Taking a look at earnings, up 99%, 240, 698, and then 58% year over year. Sales, -1, +15, +91, and +9. Then after-tax profit margin improving each quarter year over year. Fund ownership on this has been steadily increasing from March of 2020 from 326 to 442. Everyone's moving around. I moved around, did not use Penske for that, but I'm sure they're making money as people are able to work from home and move around a little bit more. So looking at the chart, this is one that Minervini was all over on his Twitter page. So if you don't follow Mark, I think he's a great follow on Twitter. I really appreciated all the books that he wrote, completely changed my trading. So definitely give him a follow. This was a classic VCP setup, volatility contraction pattern, where a stock makes a very strong move. This one off the March lows, 330%. From there, you go through a series of pullbacks to tighten up the range to kind of exhaust those sellers. So the first pullback, 23% here. Second pullback from high to low, 9%. And I need to change. No, we were on that. 9% pullback. Third pullback here, 6%. So you're seeing large pullback, medium, small, and then even this, a 2% just sideways action. And then this is the ideal setup. So if you're new to trading, take a screenshot of this chart or look at it yourself. PAG, Penske Automotive, VCP, volatility contraction pattern, massive move up, 4 pullbacks, tightened area, volume tightening up through that area, and then we get out on heavier volume. Beautiful, beautiful move through here. Same thing, we flagged through here, got out and then malfunctioned a little bit. And since then, same thing. We're flagging out again. So it's getting a little bit more extended in its move now. So instead of trying to hold for a 30% move or 40% move, this might be one where when there's a 10% breakout or 15% move, that's where I would be looking to take some profits because it is extended from its initial base here. And we don't want to get too greedy, especially as the market's kind of, again, looking at the S&P 500, we had our follow-through day. And if you don't know what a follow-through day is, I'll put the link to my video explaining that in the comment section after I'm done filming here. But we had our follow-through day on the 14th, super strong move up, and the market's just a little bit extended now. So when the market's extended, we're not usually looking for home runs. We're looking to keep our risks tight and take profits while we have them. So this is starting to tighten up again, right on that 8-day exponential moving average. See volume tightening up, ATR. This is average true range, just measures those daily bars. Another way, if you can't look at it and see, okay, we're starting to tighten up through this range, you could use average true range to do so. And then with this, just looking for a break over yesterday's high, 112.90 as a potential buy point. All right, those were the stocks that I wanted to cover. I see a couple in the chat, but we still have 17 minutes. So if you guys have any stocks that you guys want to see, put them in the chat and we'll get to as many as we can in the hour. All right, first one I see here is DAC. This is one that I had on my watch list before, very strong move up. Now starting to kind of malfunction a little bit, but let's take a look what MarketSmith has to offer. Transportation and shipping was a super strong group earlier in the year. I keep going back and forth. I'm not sure if the whole shipping crisis is good for shipping stocks because it increases prices, or it's bad because they can't do as much volume with everything kind of locked up. So I'm going back and forth on that. And the market's kind of saying right now it's not a good thing. So B- group strength right now. Let's check. Within the group, second strongest on a relative strength basis, 98. it does factor in the entire year, and obviously had a massive move this year. Fourth strongest on a composite basis. Looking at earnings, we were plus 14, 111, 95, and 197, 79, excuse me. Sales up 9, 24, 25, and 65. So we have acceleration of sales, always a good thing. After-tax profit margin, I mean, look at this. They must be charging a fortune because their profit margins are up 40% year over year and increasing. Fund ownership on this went from 7 last September to 70, so 10 times the fund ownership within a year. Let's go to the chart. Yeah, so it tightened up in this range. That could have been a potential buy point. You're setting those higher lows. But this bar really scares me. When you have a break of the 50-day moving average on heavy volume, we have thousands of stocks to trade from. That's a warning sign enough where it's like, do I want to be involved in a stock that just broke the 50-day on heavy volume, showing institutions might be taking their profit after this type of move, 2,200%? I would rather not trade a stock I don't trade stocks under their 50-day. Because if I'm trying to put my money in the strongest stocks in the market, if the stock's going to be one of the strongest stocks in the market, it's going to be over its 50-day at some point, right? Oliver Kell, during his seminar this week, talked about if a stock's going to be a true market leader, it's going to take out its all-time high at some point. So you can be patient while it's kind of exhausting sellers out and look for stocks that are already at those points. So for me, I don't want to trade this just yet. I know ZIM, another shipping, has earnings. Was it after hours today? No, before market open. This is, if you're going to choose one of those shipping, this is one that I want to be looking at. We did have a similar break of the 50-day moving average on heavy volume. I've just had more success trading this one, so I'm more partial to this, but does have earnings, which is probably going to affect DAC tomorrow anyway. But let's keep an eye on this because it's right at its 50-day moving average, had good volume, good close into the day. So DAC, look at ZIM tomorrow too, especially in the morning. We'll have more information there. It's DAC. AEHR, another good one to take a look at. I almost put this on the watch list today. The only reason I didn't is I looked at the weekly chart, something that I'm trying to do more often now. And you can see it's a little bit extended from the 8-week here, definitely extended from the 20-week. That shows how strong of a stock that it has been, but with a move like this, chances are we're looking for more of a swing trade and not like a position trade where we're looking for 100% move. This gave an awesome buy point down here in the $6 range. And even this was one of the stocks that I was buying before the follow-through day on the 7th in here. Now it's a little bit later stage in the rally. Again, looking back at that weekly chart, I have to do looking back at the weekly chart, we do have a lot of air between the 8 and, on weekly charts, I like to look at the 10-day. I'm not going to change it for this video, but a little bit of air in between that. So let me change back to the daily. If I do trade this, I'm not looking for a home run. I'm looking for a swing trade. Let's get 10%, let's get 15%, something like that. Ideally, this trade sideways kind of allows this downtrend line to show some resistance. And then as some moving averages catch up, as the market maybe trades sideways, builds up some buying pressure, then we could trade this for a little bit more an aggressive move. But it's holding up well. It's above the 8-day, above the 20, 50, 200, all in the right order. Definitely one of the stronger stocks in the market. I'm just wondering, how much more are we going to get out of this move? It's AEHR. All right, let's check PayPal. Do you think it's on its way to fill the gap? Oof. Maybe, but same thing applies. The way you can make the most money in the market is by finding the strongest stocks and sticking with those stocks. When a stock breaks under the 50-day, and here's a good example. So we broke the 50-day on heavy volume at the time, heavier volume at the time. We came up, got over it, and then immediately on the 8th of September, flushed down on heavy volume again. And then we broke the 200-day. We traded up back to the 50-day, and right when we did that, another big flush. And it went down, 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 and then we had earnings. We gapped down on earnings. Let me show this on MarketSmith to take a look at the numbers, but any stocks under the 50-day, I'm just not interested, especially if it's under the 200-day. A relative strength rating of 14, I'm out. Huge, huge volume getting out of this stock. Definitely something that doesn't scream a good buy, at least for my system. Can you buy the low, sell the bounce? Sure. I'm terrible, absolutely terrible at buying off the lows here. So not a stock that I would want to be trading. And you can see kind of a deceleration, still improving year over year, but a deceleration of earnings, 30, 85, 7, and now 4. Sales, 23, 31, 19, 13. After-tax margin, around 20 the entire time. Fund ownership, starting to decline, and that's in September. I'd love to see the numbers in December because my guess is a lot of funds liquidated positions here. But a good sign, or bad sign for the stock, but like a good takeaway here. Once you break the 50-day on high volume, especially if the second day is another down day where funds aren't even hoping for a bounce before selling again, something to be very, very cautious about. That was PayPal. Let's go cake. Cheesecake Factory. I love cheesecake. It is my favorite dessert. So I'm going to be biased about this. I'm just kidding. Okay, group strength rating, B. A B plus accumulation distribution. Composite rating, 54. Relative strength rating, 28. Under the 200-day moving average, under the 50-day, so not something that I'm going to be interested in personally. Within the group, it's got a 52, out of 52 stocks, 33rd relative strength, 27 composite rating. What I love to do in MarketSmith is if I see a stock that like someone talks about and then I see it's a weaker stock in that group, I'll hit this view stocks and industry. It'll come up with all the stocks that make up that group, and then I'll just sort by relative strength rating. And then from there, you could see, okay, here are the strongest stocks in that group. We have STKS. That's a much better chart. It is pulling back a little bit around the 8-day. We can see KRUS. That just had earnings, massive volume coming out. That's something that I want to take a look at instead. Portillo's, I'm a Chicago guy. I actually own Portillo's stock right now. That has been awesome. We did have a malfunction, kind of 3 days pulling down, got stopped out of a position that I had here, added it back on. So with MarketSmith, using this view stocks and industry, it's something that has kept me from trying to trade weaker names and really focusing on the top tier names in the market. Now the top tier names in the market can be extended, and that's something we have to play too. We're always waiting for pullback, lower volume, price range to tighten, volume to tighten. Always adding more probability to our trade, right? I always say no absolutes in trading. We're just looking to add as much probability to our side before taking the trade, and then we have to manage our risk from there. So cake, not something I'm super interested under the 200-day. Snow, super strong. Looking for a pullback at this point. 94 relative strength, really good volume on the way out. Has earnings December 1st. Keep an eye on that. Group strength, A+, accumulation distribution, A, 73 composite rating. Still not profitable, as you can see here, but sales, 4 quarters, year over year, over 100%, always a good thing, and really picking up here. So earnings in 15 days, extended. I'm not looking to make a trade before earnings, but we'll give it some time. If you're holding the stock from a lower price, if it pulls back going into earnings, I mean, I don't see a reason why you can't hold at least some into earnings there. So SNOW, Snowflake, really strong, especially recently, but with earnings coming around the corner and it extended, I don't want to take a trade on that. But not doing anything wrong, Steven, or yeah. ESEA, another transportation or shipping, broke the 50-day on heavy volume, even with strong earnings. So this is why earnings is so tricky. Really strong earnings, down 19% on heavy volume. Why? Someone decided that their earnings weren't strong enough, or the outlook that they mentioned. I didn't sit in on the earnings call. I have no idea what they said. But this is an automatic no-go for me. Again, can you somehow buy the low in the pullback and sell the bounce? Yeah, there's 1,000 ways to make money in the market. That is among the worst things that I am at. Let's see. ARBK, yeah. This is one that's super frustrating to me because I actually tried to take this trade yesterday. It opened just above the previous day's high. I did just take a small position on this, but it reversed, took out the day's low. I got out for like a 2% loss or something on a smaller position size. And it looked like, I was like, oh, Nick, good job. Way to manage risk. And I'll do that 100 times over 100. That was the right move, even though we had this turnaround. But really good action today. We gapped up, only pulled back 1% from the open, and 10% up, heavy volume. Definitely a stock to watch if we do get like another pullback. Let's see, does that have earnings coming up? Let's see. ARBK. Am I hitting the wrong button? There we go. No, it already had earnings, and the earnings, geez, these earnings are stellar. So definitely a stock that I'm looking to get a position in. I failed yesterday, and then it took off today. That's going to happen in trading. As long as you're managing your risk and living to trade another day, it'll be fine. It's not about making money on one trade or losing money on one trade. It's about finding that probability and just doing that over and over and over again. But yeah, great stock. Looking forward to potentially owning it in the future if it holds up. Tesla. So Tesla, very strong earnings, very strong sales, very strong after-tax profit margin, strong group because of itself, basically. Accumulation distribution B+, only person selling is probably Elon. Composite rating 98, relative strength 96, strongest stock. Wait, there's a stronger stock in that group? Oh, Lucid. Yeah, okay, that makes sense. Let me hide that and jump to the other chart. So you're saying, is there room? I really liked how buyers stepped in today for Tesla. So we had two candles where we broke under $1,000. $1,000 round number, psychological number for a lot of traders. We opened today lower, so we gapped lower at the open, and then buyers stepped in the entire time and pushed it higher. Let me check MarketSmith. It did come on lower volume, so I would love it to have come on higher volume, but Tuesday versus a Monday, it's usually tough to have that kind of volume unless you have earnings or something. Give this some time to trade sideways. We'll see if we can attack this later on. But, I mean, 21% pullback, I think. Yeah, 21% pullback. Under the 20, under the 8. I think Elon is done selling. Don't quote me on that. Don't know for sure. But a stock to keep on a watch list, set some alerts, see if this can tighten up. All right. Pins. I believe Pins imploded. Yeah. Gap down, heavy volume. Tried to get going again, but then another gap down. Under the 200-day, under the 50-day, no buy zones for me. Let's check the earnings, see if it had a reason for that. Not really. Earnings up 115% year over year. Sales up 43% year over year. After-tax margin increased by 30%. But in trading, only price is going to pay you. You can't turn in your 115% earnings for $1,000 of profit. You can only turn in your stock's price. And I'm not a long-term investor. Maybe for a long-term investor, you see these numbers, you see this as a buying opportunity. I don't know. That's not what I do. So under the 200-day, if this is going to be a monster stock, like Oliver says, it's going to make new highs again and then go from there. So I'm going to give this time, get up over the 200-day, get up over $66, and then maybe we could trade it in the future. I am not not interested in buying weak stocks, trying to find the strongest. And last, we got 1 minute, ANF, beautiful cup and handle, earnings right around the corner, so not trading into that. It seems like these perfect patterns always set up into earnings. It's the most frustrating thing, but that's how it is sometimes. Doesn't make it easy for you, but you got to respect risk. You could gap down on earnings, and it's not worth the risk over and over and over again. Again, we're not talking about one trade. We're talking about 1,000 trades, 100 trades, something like that. So this is looking good going into earnings, but I mean, so did, what was it, ESEA? ESEA had over a 500% earnings per share growth, and it was down 19% today. That's tough, but all right. I think that's it. Don't see any other comments. We're over an hour. Thank you guys so much for showing up. I really appreciate it. If you guys could leave a like, subscribe to my channel, I would appreciate it even more. And final plug, forgot to mention this at the beginning. I did just join Trader Lion, got a partnership with them going. I'll be running their TikTok to bring their absolutely incredible financial education or trading education to TikTok, a group that definitely needs it. So make sure you follow them both on Twitter, Trader Lion _ on Twitter, and then Trader Lion _ on TikTok, and you'll get to see me more. All right. Great live stream. Thanks for tuning in, and I'll see you guys on Sunday for another breakout watch list. Take care.